What are these opportunities that you see that nobody else seems to see here, Dan?
All right, it's a great question, Rich. I think the world is getting much more complex, and it's actually getting more global rather than anybody says. Now, what's interesting about a more complex world, the more complex the world is, the more value we can add as Citigroup to our clients. If you're a client, you're navigating very complex trade situations, you're trying to balance your portfolio across 20 or 30 countries you're operating in. You want to talk to a bank that is in all of those countries, and our network can help all of these clients.
You got your plug-in, right? Mm-hmm. Okay. So tell me, what specifically are you seeing growth in what you do?
Sure. So there's a few areas. One particular area is technology. Technology, we're going through the biggest change that mankind has actually ever seen. I used to say it's the second biggest change of mankind since the steam age. It's probably the first. The second thing is our Asia-to-Asia trade flows, our revenue in those is up 22%. Because trade does not exist in a vacuum. As people can't trade with one place, the trade flows deflect. And so you're seeing trade moving from China to the US, moving from China to the rest of Asia. And that's a great growth opportunity.
In terms of the deal flow and transactions, though, I mean, I would imagine because we're looking at all these changes, it is opportunistic for you guys. But there's also a lot of uncertainty out there. We don't know how things are going to eventually fall, where those pieces will eventually fall after all of this is over, hopefully soon. You're saying not. Are you seeing companies unwilling to pull the trigger on these big deals?
So what you're seeing is the biggest change that companies face today is the impact on technology on their businesses. So technology is disrupting almost every industry in the world. Self-driving trucks could completely displace long-distance truck driving in the United States, for example, and the same all over Asia. So what you're seeing is what clients actually want to talk about, first and foremost, is the impact on tech on their business. And if they don't do a deal that saves them or brings them forward with their strategic priorities around that, the trade war won't matter because they won't exist.
Tell us a little bit more about the offices that you're opening, which is quite interesting. I mean, you have 11 China desks, 9 Korea desks, 2 India desks. Is this really kind of where the trade flows are going right now? Is that how you kind of allocate?
Yes, absolutely. I think that's a good proxy for where we see the trade flows going. And the one thing which is important to remember, as we help clients with their operational needs, these are the countries that they're expanding into and that they need our help in, and that's why we're resourcing those.
Yeah, a Korea desk in India I thought was very interesting.
Absolutely. Lots of Korean companies doing lots of exciting things in India.
What about when it comes to China, the clients that you have there? Are you seeing them actually, given the uncertainty with this trade war, that they're diversifying away from home as well?
I think Chinese companies, they fall into several categories. They're actually being very, very smart. The one big thing about China is many Chinese companies have a huge opportunity inside China. Absolutely massive. And a growth opportunity that is so big, they're actually very careful about where to expand because they don't want to dilute the focus on that massive opportunity. Where they are then expanding into places like Indonesia and in some cases India, but they're picking their spots very carefully because the opportunity at home is massive for them.
Absolutely, but I think this is what you're trying to drive at, because you, of course, as an investment banking head, you're looking at M&A. Are you, as you were asking, are people pulling the pin on M&A activity? Are they holding back as they see what happens with these trade flows and indeed this trade war?
I think people are looking at M&A on a continuous basis. Certain kinds of M&A will be a little bit harder in the future, and that's something where we have to give clients advice around about how to navigate it. But clients, when they do look at M&A, are often looking at market expansion. That continues to happen. They're also looking at M&A to fill technology gaps that they have, and that doesn't actually slow because it's kind of strategic to their businesses.
Right. In terms of fundraising, because the other major shift that we're seeing right now is we're moving out of QE. QT rates are moving up in the U.S. Are you seeing a sense of urgency among your big clients in terms of them needing to raise funds right now before things essentially keep moving up?
Yeah. I see two things, and this is really quite important. One is, in particular, some of our more experienced clients have seen a lot of cycles in the world, and they do need capital, and then they do raise it. The second thing, and this is really interesting, is market windows are opening and shutting faster than ever before. And what does that mean? That actually means that a lot of our smart clients are preparing for fundraisings earlier so they can opportunistically take care of a market window that opens for them. Because what's happening is sometimes you can have a very good market window open. If you only start preparing, then you won't have the deal ready.
Would you say the window's closed at the moment, given just the sentiment out there is quite bad?
The sentiment is not great right now today for a particular deal, but that can change very quickly. I think what is important to realize is for large established companies, they can access the capital markets in most environments, and some of them will continue to do so. The other question is also a question about what product you are issuing. There is a huge amount of demand for high quality debt at the moment, for example.
Yeah, so what are you seeing when it comes to deal volumes then? I mean, we were talking about the conditions last year were almost perfect when it comes to lower interest rates, plenty of capital, you have these strong equity markets. Things are kind of turning right now. Does that mean deal volumes are getting smaller? You're not going to get those big transaction deals this year?
I think we're almost getting towards the end of the year. So I think there is a chance that it will slow down, but it will also naturally slow down as you get into the fourth quarter, which is always the case. I do actually feel very excited, though, about one very big thing, which is companies are growing faster than ever before and are being created faster than ever before. So today, you can start a startup for $5,000 a year with infrastructure that would have cost you $100 million 10 years ago. What that means is that the pipeline of new IPO companies, it's never been this short. We're taking companies public like Ping An Good Doctor that has a 5-year history. At the early part of my career, you could predict IPOs 10 years in advance because it took companies a long time to grow big. Alibaba went from 0 to $550 billion in GMV on their platform in 18 years. Wow. That's just phenomenal. That's 2 Bangladeshis.
If you put it like that,
right?
That's huge.
Yeah, no, I was just going to say, I forgot where I read it, that the whole, you could actually speak this, the whole tech startup scene is a farce,
yes.
Mostly. Just because there's a lot more forgiveness of companies not being able to deliver profits. 10 years earlier on in your career, I would imagine, you could see that IPO coming. Once they go public, they have to make profits. Now there's a lot more patience for these companies. There's a lot more capital going around chasing a lot of these deals, and it's keeping companies that shouldn't be alive, basically alive. Your thoughts on that?
Well, I'm biased as an eternal optimist, but I actually don't think it's as negative as that, and here's the reason. What these companies are going after is completely different market sizes that you've never seen before. Your children may not be allowed to get a driving license. We will end up in a world before we die where driving is outlawed and everything is autonomous. The companies that control those markets will have a bigger market cap than anything you've ever imagined. And that is what the investors are investing in.
Exactly. And they're also interested at that tipping point, aren't they, when suddenly you have your own driving and then autonomous driving, that insurance costs, etc., go up so much at one point that you're almost forced into it and you actually have to get an autonomous vehicle.
Correct.
But it's that point is the bit you have to identify.
That's right, and you can't predict when it is. And so what investors are doing, our investors are making different bets that are quite long into the future. And one thing that a lot of commentators have always criticized investors for is, oh, they're too short-term, they're this. Actually, today, investors are investing in very, very long time horizons, which is why you're seeing the patience that you're talking about.
When it comes to these IPOs, though, I mean, what we've certainly seen in Hong Kong, where we had this flurry in the beginning of the year, and most of these stocks now are basically under their IPO price. What do you attribute to that? Is that just a valuation case to be made? Or, you know, and given that some of these concerns, are we seeing less in the pipeline, too?
So what I will say is if you look at those particular companies, the long-term story for those companies hasn't changed. What is changing is the willingness of investors, how far they're looking out. And that looks at their risk appetite. And so what you're seeing is changing opinions on risk appetite. I actually think most investors aren't changing their view on the long term. What they're changing their view on is how patient they are in some sense as you go along that. As these companies develop, if they deliver on that long-term vision, the prices will all rise again.
Okay, everybody wants to be a tech company now. That's what you're saying. And this is something that you have to also be able to sell to them, to your clients. And how do you do that?
Okay, so one way in which we do that, and that's very important, if today we're going to go pitch a fintech, we don't just take our FIG team anymore, we take the FIG team and the tech team. Or even into automotive deals, we bring both seas of expertise in, and we have them both talk about the impact for their company, how you would position the equity story, how you bring the tech part of that into the system. And I think that collaboration is more important than ever.
So where are you seeing more of that, regionally speaking, let's say? You know, where's the growth in, not just that, but generally speaking, for Citi now?
Okay, so
and we have to clarify on the deal-making investment banking side, yes.
Sure. And even on the operational side, because the two follow each other. China is tremendously important, as it always has been. Southeast Asia is important. All kinds of businesses that are driving disruption, in particular around everything as a service, there we are going to see very, very large growth.
Should we treat those two parts separately?
Sure.
China and everything else in Asia? Because it doesn't seem you're getting the big Chinese companies really making proper inroads into markets like Southeast Asia and vice versa.
Or do they need to? That's the thing.
Right.
Yeah.
So, look, if you look at what companies like Alibaba are doing, expanding with Lazada, I think you are seeing companies having very meaningful and leading positions in those countries. What is true, and again, it's your tipping point, Rish, that you were talking about, Indonesia right now is at a GDP per capita level where consumption is just about to take off. They're coming in slightly before that, and they're hoping that as that tipping point hits, that represents a very large growth opportunity, which it absolutely will. It's only a question of when.
And this coming at a time when, of course, China is opening up their financial markets as well. Can you give us an update on your securities JV venture and what's coming up on that front?
Sure. So we are very happy with our securities JV, and that's doing a great job for us, and our clients are very pleased with that. The opening of the financial markets in China is something that we also find very exciting and a great opportunity. And so right now we are very excited about everything that's happening in China, and we'll continue to grow.
While that opens up, what about the Belt and Road Initiative? Because that seems to be an opportunity. They say it's an opportunity for all, but is it really sewn up by Chinese banks ultimately?
Okay, so I don't think so.
But I mean, do you have facts to support this?
Sure. So let's talk about one specific deal as an example. We helped Telenor sell its microfinance business in Pakistan to Ant Financial. So what did you need to serve the client properly? You needed coverage bankers in Norway that understood the client.
Is that Belt and Road, though?
It is, because you're selling a Pakistani asset to a Chinese. It doesn't get more Belt and Road than that, right? But you had an owner in Norway. You needed on-the-ground boots in terms of investment bankers in Pakistan. We are lucky enough to have that. And you needed bankers in China. So to pull all of that together in an international fashion, that's actually a very good example, a concrete example of something that we've done.
The other topic that we talk about here when it comes to China is obviously the economy is going through a fairly rough patch. And, you know, part of this mini stimulus package that they're putting in is they're basically asking the banks to lend more to smaller, medium-sized companies, to private companies. Some of our guests have pointed out that when you look at the Chinese banking sector, it's not exactly built and designed to service the private sector. It was designed to service the SOEs. Your thoughts on that, and what would you like to see as reforms there ahead in the banking sector?
Sure. So look, I'm most involved in where we're serving our clients. We have a business that serves small to medium-sized companies, and it's specifically focused on that. And these businesses, we're acquiring several hundred of them a year in China. And what's interesting, why we think it's an exciting space, is a lot of these companies are growing phenomenally fast. And one very specific example for you is there's many Chinese manufacturers who are developing their own brand and growing very fast, selling via Amazon into the US. And that's something that we're trying to support.
Jan, final question for me, I don't know about you, Evan, but how worried are you about the trade war actually putting all this to waste?
I'm not. I think you're going to see the trade war will probably continue for a while. And what you will see, though, is that in that environment, I think the intentions of everybody are not malicious, I believe, I hope. And what you're going to see is that the world will find ways through this. And one thing to remember is that companies are smart and will find new opportunities and will evolve over time and find different markets to sell goods in.